Hello everyone. This is the pre-market report video for today, 20th December 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday early morning before our market opening, at one point of time, GIFT Nifty was indicating a gap down opening of 400 points. But fortunately that didn't happen. Instead, still it opened 300 points gap down and throughout the day it was very steady, then closed 250 points down, which was around just 1%, not crazy as 3.5% drop in the US market. I mean, to be honest, opening below 24,000, I thought it might create additional selling pressure, but to my surprise, market was very stable. Part of the reason at that time, US future index was trading 0.5% positive, which kind of indirectly indicating that US market fall was arrested. In fact, other Asian markets outperformed as they were down only 0.5%. Sector-wise, only pharma closed positive while all other major sectors closed negative. Pharma was positive because Nomura, one of the biggest investment firm, upgraded the rating of some Indian pharma stocks. For example, they upgraded Dr. Reddy's to a buy rating from neutral, which in turn made that stock price to increase 4%. In addition, if you see the top 5 Nifty positive contributors, then top 3, all of them were pharma stocks. Overall, yesterday market was not bad. 41% of the listed stocks closed positive and still 56% ended on the negative side. Then moving to the volume and open interest analysis, in the index future market, proprietary traders reduced their short position by 7.5% and increased the long position by 5%, which is good. However, FIIs increased their short position by another 11%. Either way, still both FII and proprietary traders holding near 70% of their positions on the short side. Then about the option derivative market, yesterday roughly 35% of the total open interest either expired or unwounded, which needs to rebuild to confirm the participant stance. However, with this present open interest position, retail traders open interest difference 9.5% more wants the market to go up. On the other hand, both FII and proprietary traders position difference favors the market to go down. Here, please note both FII and proprietary traders present stance is negative, but significant large quantity of open interest closed on the yesterday expiry. So we cannot be sure about the stance. It's very fluid now. We have to wait for a couple of more trading sessions. Anyway, other than that, in terms of value, in the cash market for the 4th day in a row, FI was net sellers. Yesterday, they net sold for 4,220 crore rupees. On the other hand, DI net bought for 3,950 crore rupees. So these are the quick takeaway from yesterday's Indian market. Then coming to US market, before their market opening, their government released the final Q3 GDP growth rate, which came as 3.1% above the analyst estimation as well as above the Q2. This GDP growth rate shows how US economy is strong. In addition, weekly job insurance claims data also came as less than the expected as well as the previous data. So both the macro favors the market, hence for most part of the day, their all 3 major index traded significantly on the positive side. However, quadruple witching day and fiscal year profit booking erased all the positive run and made the market to close flat to negative. Dow Jones up very marginal 0.04%, but S&P 500 was down 0.1% and Nasdaq decreased 0.12%. In case of VIX, it dropped 14% and moved around 24 from above 27. So US market didn't deteriorate the global momentum, rather it had some profit booking. Then GIFT Nifty price action just followed the US market. I mean, sometimes early morning today it traded about 24,050, but while making this video, it again dropped to 23,958, equating that with the Indian spot market. It's indicating the gap down opening of 40 to 60 points. However, if you see the Indian ADR, both the IT stocks increased significantly around 3%, more than the Wednesday night drop and certainly more than the equivalent Indian market. Hence, both the IT stocks have positive arbitrage of at least 1%. Regarding the reason, we'll see in a moment. on the other hand, both banks ADR closed neutral. So IT stocks are positive and banks are neutral. Then regarding oil and also metal commodities, all price dropped significantly because of the dollar strengthening. In fact, rupee dropped below 85 rupees per US dollar. Anyway, at the time of this video, WTI crude trading around 69 US dollars per barrel and Brent crude trading at 72.5 US dollars per barrel. Those were the things happened yesterday in the dollar market. Now coming to the new Indian market related info. First, regarding the IT ADR positivity, yesterday in the US market, Accenture released their quarterly earnings, which beats the analyst estimation. In addition, they increased their future full year and next quarter expectation on their business update, which in turn increased the Accenture share price by 7%. Just for info, Accenture is the market leader in the IT service space. So because of its good business update, market expecting the same in Indian IT companies, Infosys and Wipro. That's the reason yesterday both IT ADR increased significantly. So I'm expecting even on Indian market it to react positively. Then second about Reliance, yesterday in the aftermarket hours, they announced that Reliance Industries resuming their oil swap with Venezuela earlier, which was paused due to US sanction. So I consider this as positive, but is it enough to arrest the Reliance share price recent fall? Only time has to tell. Other than that, yesterday Airtel paid their spectrum fees to the Indian government earlier before the due date, which I personally consider that as positive. Nevertheless, Airtel will be on focus. Then auto battery companies Amara Raja and Exide Industries entered the agreement with Hyundai Motors India for supplying the batteries. So both the companies will be on focus. As a summary, US market closed flat to negative and I personally think it didn't deteriorate the global momentum. However, despite the IT ADR positivity and some stocks positive like Airtel and Reliance, still GIFT Nifty indicating the 40 to 60 points gap down opening. Don't know why. In addition, as I said in the open interest volume analysis, right now both FII and proprietary traders makes money if market goes down. However, the open interest value is very light due to the yesterday's expiry. So they might change their stance anytime and the present stance is not definitive. About the things to look out, before our market opening, Japan's consumer inflation is due. Then very important, Chinese interest rate decision which can potentially influence our metal stocks. Then during our market time around 12:30 PM, UK retail sales data, Germany, France and whole Europe's PPI data, which is nothing but wholesale inflation, is scheduled to release. And finally, in the aftermarket hours for India, RBI meeting minutes is due. Then for US, PC inflation and Michigan future inflation expectation are some of the items we need to keep an eye out today. Just for info, yesterday Europe's consumer inflation came as 2.2%, increased from 2%. And please remember, tonight is US quadruple witching day. Coming to technical, as we discussed earlier, Nifty opened more than 300 points gap down but closed at down 250 points. Thus on the daily chart, it formed a bullish candlestick pattern with a minor upper shadow indicating some buying interest at lower level, which is positive. In addition, it managed to defend 23,900 on a closing basis. However, on the negative side, it traded near the lower end of the Bollinger Band. Then now Nifty moved below all key moving averages except the 200-day exponential moving average, with RSI and MACD momentum indicators showing negative crossover, those all indicating possible weakness. So as long as Nifty stays below 24,050, 50% Fibonacci retracement, we can expect the consolidation to continue and it's the immediate resistance. Then above this level, 24,350 will act as the key resistance. However, in case of a further decline, 23,700, 200-day exponential moving average can't be ruled out and it's the first line of support. Then in case of Bank Nifty, it opened 700 points gap down and closed around 51,500. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern with both upper and lower shadow, which in turn indicating volatility. And similar to Nifty, it also traded below all key moving averages except the 200-day exponential moving average as well as below the 50% Fibonacci retracement. Hence, on the higher side, the immediate hurdle is at 52,000. On the downside, 49,700 to 50,000 zone is the immediate support. Regarding the options front, the maximum call option open interest was at 25,000 strike strike followed by 24,000 and 24,500 with maximum new call option rating at 24,000 strike, then 25,000 and 25,500. On the put side, the maximum open interest was at 24,000 strike followed by 23,000 and 23,500 with maximum new put option rating at 23,000 strike, then 24,000 and 22,500. Thus, from options data, it's indicated that 24,000 level is expected to be crucial for further direction. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.